come out right now or not, but we'll go ahead and get it started. So I'm Dean Nolan, and first of all, thank you for joining us today. We're going to be talking about the future of bill pay and receivables. We're really going to focus more on the future side of that. So I've got some great panelists who will be coming up and joining us here, who each are doing some really unique things in the receivables space. So with that said, why don't the rest of the panelists come on up here? Surprise.
We're joining you. Didn't even fall.
And so just to kick us off, first of all, I'd like to thank RevTech Labs for allowing PAYCLT to partner with them and do this panel. For those of you who may not know who PAYCLT is, we are a professional payments organization based here in Charlotte. We have national, somewhat global membership. We picked up through the pandemic. What we do is we provide a forum for our members to talk about the latest and greatest things happening in payments. So we do a monthly webinar. We follow that webinar up with a podcast that goes into greater depth about what we're doing. Also, just want to thank our sponsor, Endava, who has been a generous sponsor of us, help us do events like this. And if anybody wants additional information about PAYCLT, you can find us on LinkedIn or also on the internet, payclt.com. We're always looking for other organizations to work with us and individuals to join us and participate. So with that said, I'm going to move from that part of the public service announcement side of this into the actual panel. Joining me on the stage today are three subject matter experts in the area of bill pay and receivables. And really, each of them are involved with doing some cutting edge, futuristic stuff in this space, whether it be on the bill pay front, small business front, some of it extending into receivables as you start to get into the whole point of sale space. So we're going to talk a little bit about all of that today, and I hope you enjoy the discussion. So to go ahead and kick us off, I'm going to turn it over to Sarah, and I'm going to ask each of you to give a quick introduction of who you are in your companies, and then also just a little perspective of what you see happening in the bill pay and receivables space today, and then we'll get into some more detailed questions. So I'll hand it off to you.
All right, thanks, Dean. So, well, good afternoon, everybody. I'm Sarah Hoisington, Head of Strategy and Marketing for Matera. Matera is a fintech. We're headquartered in Brazil. We are probably best well known for our Pix instant payment solution. If you don't know, Pix is this crazy successful instant payment scheme in Brazil, and we are the largest third-party provider of Pix instant payment solutions. We not only do instant payments, but embedded in that is a QR code solution, and so we are bringing our technology to the US. In terms of what we're seeing, I'm going to talk a bit more in a minute about what's going on in Brazil, which we kind of see as the future of kind of where bill pay and payments is headed from the US perspective, as more instant payments, another rail comes online and more banks are able to offer instant payments. There's just an ability to enable consumers to pay with a lot more convenience, to pay anywhere they want, whenever they want, with not very much friction. And I think that's, when you look at the US landscape and what consumers want, they really do want convenience, they want immediacy, and that's something that we're going to be seeing, I think, in the US a lot more in coming years. Hand it to you.
Hey everyone, my name is Vin Montez. I am the VP of Small Business Product Innovation for Paymentus. Paymentus is a publicly traded company. They're a bill payment services provider for some of the largest players here in the United States and global. And my job there is basically I lead the small business division, and my responsibilities is basically to innovate products that small businesses can actually use in the bill pay space to get paid faster, cheaper, and more convenient.
Cheryl?
Hi everybody, I'm Cheryl Gers. I'm VP of Product Development of the RTP payment channel at the Clearinghouse. I'm up here with fintechs, and I like to say we started in 1892, but we still consider ourselves a fintech, just to let you all know. We introduced the first instant payment network in the United States in 2017. We currently run that network. We do almost 1 million payment transactions a day. It's a credit push system, and are excited to see that FedNow will be coming on board, and we'll have another regulator and competitor join us in bringing instant payments into everyone's vernacular in the United States this year and next. Now, why would we be interested in Billpay? We are a credit push system, so today the activity on the network is all about credit push. People think of it as disbursements, so get those disbursements out there. It's in a very secure environment, cuts down on fraud, and the receivable space is where we are now focusing on the infrastructure. The pipes that we have actually have permitted what we consider a replacement to direct debit, which is a very common way that individuals in the U.S. pay bills, and how we can flip the switch on that and put the consumer in control and not the biller in control of when a payment can be made. So that's going to be, we'll be rolling out. It has been slowly in a pilot stage, and it will be coming on later this year into next year. And with 3.1 trillion bills paid in the United States by consumers each year, there is a very fragmented market and many people that aren't very happy with their bill pay experience. So we really see this blending of the instant payment network along with a replacement workflow for direct debit to be a real game changer in the bill pay space.
Well, thank you. And I appreciate all the introductions and everything. So what we're going to do is just kind of follow up on that a little bit more. Sarah, you mentioned some of the work that you guys have done with PIX in Brazil.
Yeah.
I know for those of you who follow the payments industry, they are a little bit ahead of us. They've got a pretty unique system down there. So perhaps you could just give us some insights of some of the things you've seen unique there and how Materas has been helping them.
Yeah, sure. So for those who don't know, PIX is the instant payment scheme that was launched in November of 2020 in Brazil. And I think it was the fastest adoption of any instant payment scheme around the world. In just about 2.5 years, it's already the dominant tender type. So there's 3 billion instant payments, PIX instant payments a month in Brazil, and that is 50% more than the credit card payments. That's more than 50% more than the debit card payments. And what's interesting is the fastest growing use case of PIX is P2B. So that's people paying billers and merchants. So I think 27% of the 3 billion is P2B, and that's up from 11% 2 years ago. So billers and merchants, they love PIX. It's cheaper, they get their money instantly, and reconciliation for billers is really easy because the main way that these instant payments are initiated is by QR code. So the way it works in paying with the QR code is a little bit different than in the US. You know, we're all used to going to a restaurant, seeing a QR code, we open our phone, we get the camera, we scan it, we get the menu. In Brazil, when people want to pay a merchant or a biller by QR code, they have to do a couple things. They've got to unlock their phone, they've got to log into an authenticated environment. So that's typically their mobile phone app, mobile banking app, but they usually do that by biometrics, so there's not a lot of friction. So if a consumer gets a bill and it has a QR code on it and they want to pay it by PIX, they get into their mobile banking app, they scan the QR code, they're presented with the bill information, who they're paying, how much they're paying. If they're paying late, it's automatically calculated for them. They don't have to get a new bill or a new QR code. It's already factored in. They review the information, they pay. That transaction is settled instantly, immediately. So the billers love it. They get their money instantly. And as I mentioned, reconciliation's really easy because QR codes can handle a lot of information that can get sent directly to the biller with the payment. So they've got an easy way to tie together the payment with the transaction. The other thing I will just say about kind of what's going on there in terms of not only is it instant payment initiated by QR codes, but the billers and the merchants love it so much that they're promoting it with their consumers, and they're doing it in lots of different ways. Some of them are just sort of saying, hey guys, Pix is available, please pay by Pix, or maybe listing it as the top payment option among the different methods. Second way is we're seeing discounts being offered up to 15% off for consumers that'll pay by Pix. My personal favorite are the sweepstakes. So Matera's co-founder and CEO, Carlos Neto, he lives in Brazil in a town called Campinas, and the utility company he uses a couple of months ago launched a campaign, and it says, pay with Pix and be entered into a sweepstakes for the opportunity to win 1 year's free electricity. So anyway, interesting to see some of the innovation and the creativity going on in Brazil when it comes to bill pay and also paying at point of sale.
Wow, years for utilities, that would be nice.
Wouldn't that be interesting?
I could do that.
I
yeah,
know,
yeah.
that's actually, that would add up.
I'd try it. So, yeah, that's very cool. So Cheryl, I know you were talking about what the clearinghouse is starting to do with requests for payment and getting into the space. I don't know if you guys are doing any clearinghouse stuff. Well, clearinghouse with sweepstakes, it kind of fits. But
That's how everyone thinks I work for, the clearinghouse.
Well, so, I mean, QR codes can kick off any kind of payment, right?
Yeah.
So it can be RTP, right? Hopefully, but now coming, when that launches in a couple months, or next month actually, it could kick off a closed loop transaction. It could actually kick off an ACH. So in Brazil, it's PIX just because that's the dominant tender type. But.
And then Cheryl, maybe on the request for payment side, talk a little bit about what Clearinghouse is doing on some of the bill pay stuff. And I don't know if you guys are thinking about QR codes down the road as well, but anything around those lines.
Right, as we brought an instant payment scheme into the US, what's a little unique on the US, and we go and we learn from our global payment scheme operators, but the United States is, I think as you guys know, is very unique. We have 9,100 banks that need to connect to this network. And reach is always difficult because in many of the other countries, the government's mandated. We just keep adding payment types in this country. We never shut any out. And talking to businesses and even friends and family, everyone's confused. When do I make a Zelle payment? When do I make a PayPal payment? When do I make a Venmo? Why should I use an instant payment? Why should I use same-day ACH? We just keep adding. And when we're adding, we're confusing. And on top of that confusion is that we have so many different models for bill pay. Biller Direct. Go to the Biller Direct to his website. Go to the online banking portals. Or put on your credit cards, because your credit cards are giving you discounts in order to pay your bill by credit card and not use ACH or not use instant payments. So one thing that we work with the banks, we're owned by 24 of the largest banks in the United States, and it's very, very difficult when the behaviors have to change. The technology is there. We use ISO 20022. We have conversational commerce back and forth. We can fit anything to a biller, anything you can have. But trying to get behavior changes by both the billers and the consumers in the United States is difficult. We have looked into QR codes. That hasn't taken off, unfortunately, in the US for payments. Because we sort of like our digital wallets, we sort of like the QR codes to pick up our menus. We just are not yet a consumer or a business focused country that has adopted QR codes. Maybe at some time, let's hope, but right now we have it, and we do watch. We've done studies the last 5 years on should we issue everyone in the US a QR code with their DDA checking account number in it? And think about it at the point of sale. You have many merchants that would love you to come in with a QR code so they don't have to pay their interchange, you know? So there's very much financial dynamics from so many different players in the payment ecosystem today, and trying to get away from the noise and bring a new product offering has been harder, right? I would say than you would think. I know Dean is involved with his billers and his consumers, and it's really hard to say, hey, we have a new way to pay a bill. And they're like, well, I just went to my app store and there's 80 fintechs that can pay my bills for me. Why are you bringing something new out? And that's where we're at now. But we see the security, the trust of paying your bills as a consumer through your bank channel, and not allowing anyone to come into your account to take money out. In the next 5 years, I think you're going to start to see the request for payment for bill to take off, not just in the consumer, but in the business world also, because of the security and trust and all the fraud, and stop fraud, and give more security of who your counterparty is, because you know them. And that's what we're working towards.
Thank you. You brought up a good point about all the different ways that people pay bills. And I know we're right after lunch, so maybe a little audience participation here. So I'm going to ask you all just to think really quick for a second of your bill payment habits, and start off with, how many of you in the audience are paying your bills by just one method? That's pretty good. 2 or 3 people there. How about, you know, there are at least 2 different ways you do to pay your bills? 3? More hands going up. Anybody 4 or more? Yeah, that's what I was thinking. It's the guy who cuts my lawn wants to get paid by Zelle right now, and some of my utilities, you only have to go to the Biller Direct site, and then we try to do some through the bank, and then there's, oh, and I'm not even going to talk about medical bills because I don't even know how those get paid sometimes. But yeah, it's just fascinating. So I think it's a really great point you brought up about the different ways that bills are getting paid. Vin, I know you guys are working with small businesses and trying to help them in this whole bill pay arena, which has got to be really complicated if you've got a small company dealing with multiple different ways people are paying. What are some of the things you guys are doing in the space?
Yeah, so Paymentus is an enterprise company, but now we have a product called Profit. That's profitnow.com, where a small business can come in there and sign up. They can go ahead and set up a budget. They can set up a project. They can activate a checking account. They can activate employee cards and give them to all their employees. They can assign employee cards to specific budgets. So let's say if you have say Cheryl is the sales manager, you assign her the sales budget, and then you can add all your sales employees underneath her budget, and she can then transfer money to their cards. And then everything that is spent, then our system basically documents it. We show you nice analytics. We show you who's your highest employee spender in that budget, who's spending the least, and their trends. So clients are really liking that. Then also on a project basis, let's say we have a construction company that wants to do Sarah's Kitchen. You can go in there, set up Sarah's Kitchen. You can invoice that. You can invoice Sarah, that client, right from Click Invoice. And then Sarah will get an actual email or text message to pay that invoice. It goes right in there. We categorize as revenue. And then all the expenses that come out of there, you can add employee cards to that project. We monitor all that. And at the end of the month, we tell you exactly how much money you made from that project. It could be, maybe the project takes you longer than a month, no problem. But at the end of the project, you'll be able to see exactly how much money you made or lost on that specific project. So that's one thing that they're really liking. Another thing too is to your QR code, client can now go into this is something we're testing now. So you have a plumbing company that goes to your house to install let's say a new toilet. And at the end of the job, pull up, click generate invoice, you put toilet installation, $500, you click generate QR code, send text message, send email. So it does it all at all three at the same time. And now your client can literally just scan your QR code. You get the payment page. It already has toilet installation, $500, and they can pay you right then on the spot, or they can pay you via text when they click on that. So it's a great way for the small business to collect payments like right away, or like right on the spot. And then to layer on top of that, our system has your AI bookkeeper called Iris. Iris stands for Intelligent Reconciliation Embedded System. So any expense that goes in the profit platform gets reconciled by Iris, and then Iris knows, for example, you're a plumbing company, so she builds your chart of accounts, your profit and loss, your balance sheet, and your cash flow statement, and she reconciles in real time. So every day you can log in to your account, to profitnow.com, and then look at exactly see how much your business is making or losing on a daily basis. And one of the things we've noticed that we've gotten a lot of success with that is because we're giving the clients what they want, which is convenience, right? They don't have to get the spreadsheet, they don't have to go to an external accounting software, they don't have to go to an external payment software. They can just come into Profit and it's all embedded all there. It's cheaper because it's AI. It's not, you're not paying a bookkeeper. Like one of our clients pays a bookkeeper was paying a bookkeeper $500 a week, which is $2,000 a month. And she's saving that now because we've trained her AI, Iris, to do her bookkeeping exactly the way she wants it, saving her $2,000 right from the bat, right? It's right from the beginning. So she really, really appreciated that. She actually couldn't believe it, and she kept calling us, is this accurate, is this real? And then we kept meeting up with her, yes, those are your transactions, it's doing it. Like, thank you for communicating with us. We trained her to do exactly what you wanted. So they really like that, and it's actually faster, right? So now, before, say they have a Stripe account, they have another external processor account where they bill the client, then that money in 2 days goes to that processor. And now if you want to deposit that money to your bank account, you got to wait another 2 days, or they hit you with that, 1% or whatever percent fee if you wanted to get there the same day. So what our system does is just eliminates that middle processor, and you go straight from your client to your account at Profit. So it's good ways to save clients, time and money, but above all, it makes it more convenient. And that's what we're seeing out there in the market is small business owners are so busy managing their business, growing their business, that sometimes they even forget to bill their clients. And so if you have a system that automatically does it and does it right there on the spot, as soon as I install the toilet, they can just generate it and pull up the billing. Versus I'll do it later when I get back to the office, and then some emergency happens, they forget to bill that client. It's a way for them to get paid quicker and faster and cheaper.
It's impressive. I like the AI component of it. It's kind of fascinating as we're sitting up here talking. We've got a new payment rail that's in the US that's getting adoption. We've got a new way of consumers and businesses to kind of connect to it with QR codes. We've got a solution that's got an AI based on top of it. I mean, it's pretty fascinating. I saw when we put this together, and I was talking with the folks at RevTech, and we're talking about bill pay and receivables. They're like, oh, bill pay, it's kind of boring. It's like, well, it's not. It's about AI. It's about QR codes. It's about an instant payment system that moves money immediately, that this country, the first new payment system of 40 years in this country. So a lot of cool stuff happening there. We've talked, I actually saw some questions come in from the audience, and if any of you haven't seen that, there is a way to submit questions via the app. But we got a question that came in, and I think it was an interesting one, kind of pivoting a little bit from a lot of the discussions we've had so far, which have been consumer to business. But this one was, with so many checks still used for B2B payments, how should fintechs be thinking about managing fraud risk and maybe automating some of those? And I don't know if anybody wants to jump in and take a shot at that.
Sure, I can jump in first. So as you can imagine, any fintech platform, one of the major ways to commit fraud is through checks. So we get a bunch of random small businesses sign up, and the first thing they want to do is deposit a $9,999 check. And you know, it's one of those things. But we also get clients that sign up with us and they tell us like, look, we ask them, how much are you expecting in check payments? And right off the bat, they tell us, pretty much less than 5%, like maybe 2%. And then we check in with them 3 months later and we realize that about 60 to 70% of their revenue is through checks. It's one of those things that, like, even pre-COVID, people were saying, oh, checks are gonna be gone, you know, in the next, 3 or 4 years. Once COVID hit, then people said, yes, definitely, this is the end of checks. They're done. And they are the most resilient tool out there. People just like love paying the checks. And I think part of it is because like small businesses can float money that way without getting a credit line. And what I mean by that is, say we have clients that they'll say they have to pay one of their vendors, and they'll say, look, I like giving them a check because when they come asking, hey, I need payment, I can give them a check. And by the time they deposited that check, I actually have time for my revenue to come in from my clients to actually get enough funds in the account to pay that. But it's a way for me to improve my cash flow versus not having the payment there and then, getting hit with a late fee. As long as I give them a check, they say, hey, payment has been made. And so it's one of those things that we've seen that it's extremely resilient, and I think it's just a way for them to, stretch their cash flow.
But yeah, check fraud is on the rise though, unfortunately. So the more that those payments, I mean, the small businesses may like them, but the more they can go digital to help minimize some of that fraud, the better.
That is scary as an ex-banker hearing that, because they'll get caught. They all get caught, and then they get so much in fees because they got return fees. And it gets back to effective cash conversion cycle management. You have to understand your ins and outs. And by using instant payments now, we have many of the banks talking to their small business users, because instant payments it's not paying faster. If I hear that one more time, it's about aligning your ins to your outs. And you're maximizing your liquidity. If you know you're getting a payment in today from your vendor, it usually comes in today at 5 o'clock, you can make your payment out to your employees at 6 o'clock and they have it at 6:01. It takes 30 seconds round trip. So by using instant payment networks that are open 24/7, and your banks have the interfaces for you that are available 24 because it's all on your digital banking, small businesses can now eliminate the threat of all these nuisance fees to be able to get better at not having to project that this is a 2-day settlement with ACH. This is 2-day settlement by credit card. The only settlement that is same day in the United States is instant payments 24/7. So you use those tools to make your business better. And I'm sure all of you are saying, oh, I've heard faster payments, faster fraud. It's a nice tagline. But if you're going and doing your business on your controls when you initiate a payment, dual authorization, making sure you look at an input or an authorizer, you're doing that. When your bank then gets it, your bank isn't instantly sending it to the instant payment network. Your bank is doing their fraud controls. Your bank is doing their AML controls, their sanction screening controls. Some banks may not even release that payment for a couple hours because they're going to call you to make sure that their AI has said, ooh, this seems to be an out of norm activity on your account. So then only when it has been you, the business, that have done your requires through SOC, all your control requirements, your bank is then doing their control requirements, that's when it's sent into the network, and it's 30 seconds from then and when it's confirmed and it's receipted on the other side. So it's not faster fraud. It is, as long as there's a strong control place with the bank you use and with your own internal selves, there's no reason not to leave the world of checks and go to the world of electronic. And it's up to us in the industry to really start the education for the small businesses to show, you know, there's ways for you to actually be more efficient and have less fees and expenses if you learn how to use the tools that are readily available for you to make payments to maximize your cash conversion cycles.
And to add to that is, it's the, like a lot of people forget about what's reality, right? Like prior I had a small business, you know, ran it for 8 years. And when you're a small business owner, yeah, obviously, like in a perfect world, if you had $1 million in cash in your bank account every month, yeah, instant payments, everything electronic, I can track everything, you know, no problem, you know. Heck, wires, no fees, no problem, same day. But the reality is that like small businesses run tight on cash flow, right? They're not sitting on $1 million of cash. And so that's the reason why checks are not going away, is because it allows you to get that biller off your back, even if it's for a couple of days. And they use that, and that's what they tell us. And they have all the tools. They have the means to do these quick payments, but they just don't want to because it's a cash flow issue for them.
Well, and maybe in support of that, interestingly, in Brazil, when you look at the use cases, B2B for Pix, I think it's like 3% of all the transactions are B2B. It's like the last use case that's going to come around. Can be because of this sort of, I don't really want that money out of my account. But they also have, I mean, if they're a bigger company, they've got this infrastructure that it has to get updated to accommodate it. And a lot of those are run by the SAPs and Oracles of the world. And they're like, I don't really want this. And so whenever any business says, hey, I would really want to use Pix, they're like, it's $1 million in 18 months, and then maybe we'll get it going for you. So interesting to just kind of see, like, with this hugely popular instant payment scheme, B2B hasn't been a use case.
That's a use case on ACH, very big use case on ACH in the US. Instant payments is just starting its world journey, and we already have B2B. You know, checks, we run check network, settlement network. Checks are declining 8% a year. They continue to decline in the US. You know, checks are where the fraudsters live. And any company that's putting their future on writing checks, they're going to get caught, and they're going to have a fraudulent check that is going to be worse than ever trying to put an electronic payment in there.
Interesting point. And you set up, I like the way you ended that too with it about putting electronic payments in there. You're talking about, you know, we've talked about some pretty cool things that are happening in the space. What's going to need, and one of the things I've noticed is I've been looking at some payment trends across multiple payment types. And what I've seen is pre-pandemic, there was a trend line of migration towards digital that was happening. And then during the pandemic, there was this big jump. And since the pandemic, it's gone back to the pre-pandemic trend line. It's still, you know, it's like, yeah, we had something change, but now we're back to moving slow. Which kind of leads into what I think I was hearing here a little bit of, there's some things we have to get through. So in your perspectives, what has to change in order to make some of these payments become more prevalent, whether it's the QR code or the automated bill pays or for the small business or the new payment network? Just kind of throw that out to you and just see what do we have to have change?
Yeah, I mean, QR codes right now in the US, for us to use those for payments, closed loop is the best use case. So partly because there's no standard, right? So in Brazil, there is a QR code standard. The Central Bank of Brazil dictated it's an EMVCo-based standard that everyone follows. So a QR code generated for a merchant by Itaú can be read and paid by a consumer who banks at Bradesco, because the banks understand how to actually process that. In the US, we don't have that until we have either enough big banks using the same standard, the same kind of solution, because it's unlikely the Fed or anybody else is going to come in and say, here's the standard. That's not really how it works in the US. So I mean, I think to use QR codes for payments right now, it's more closed loop. I mean, I think you've got a good use case going on, right? And that's kind of the way it's going to build momentum. But as we get more, I think, using the similar standard, that's what's going to make it take off, and what's needed here in the U.S.
And I think, as I said before, there's no government mandates in the U.S. All of these innovations are market driven, and closed networks have shown to explode when they get to a certain scale. And the U.S. is, again, 9,000 banks, and then look at all the merchants, and we have huge numbers. You know, I have colleagues that come from Canada to check us out, and they're like, oh, and I'm like, you guys got 10 banks. You know, it's real hard, it's real easy to get standards when you're talking together with 10 banks. And when you're talking about standards with 9,000 banks in the country, it gets very difficult. And then you start adding in all the credit card POS terminals and every other payment scheme network that has found their own way to get their own competitive advantage. It becomes very difficult in the US. It's competition. It's called market competition. And I think the thing that's making some progress in the US for standards is the open banking. So once we get more into open banking and having consumers understand who's having access to their financial data, and they themselves are going to say, yes, I understand this third-party company can have access to my records, but I'm going to control what access to my records they have. Once we start getting our open banking standard, I think that will force more standards around different ways to pay, QR code, or people are calling decoupled debit cards that aren't put together with a bank. We've got our mobile devices. You know, there's the wallets, all the wallets we have today out in the industry. I think open banking will help us start to find the winners. I don't think we'll have the thousands of solutions we have today. I don't think we're ever going to get to one. It's not the American way, but we'll probably get to a more different type. Look at the credit card world in the United States. There's two issuers, you know, and some others have tried, right? There's probably 4 altogether. But we never we end up coming to a point where we have choice, but it's not just one standard. And I look at Sweden and some of these other Nordic countries, and I just look and say, I love how they tell us what we should do, and I'm like, that's not the American culture. And it's behavior and culture, that's who we are, and we can get it better, but I don't think we're ever gonna replicate any of the other countries that have smaller populations and started from different places.
So I think also availability, making these tools available to the consumer, to the small business. For example, one that we have is we're going to be rolling out is IVR, where if you're a small business, we give you a phone number that you can just give your client. They call that number and they can just process payment in that phone number. Simple as that. The second one is printing the QR code where, say if you have a little store or say you go to a little market, you print out the QR code, you put it right there, people just scan it and they can process payment without a POS device. And even on the expense side, like one of my favorite technologies is fund to text. And so I remember when I had my small business, someone needed to spend money somewhere. They're let's say at a Home Depot buying materials, and I was busy in a meeting, and they just lost literally 45 minutes standing there until they were able to get the funds. So we have this technology, it's called fund to text. So what you do, if you're the sales, in charge of the sales budget, or you're the project manager, anyone underneath you that needs money, they can text that phone number that we assign you, and say, I need, say, $40 for copper pipes, and then, you can put, those 3 feet of rusted pipes that we didn't account for. Then you get a text message that says that, Vin Montez needs, $40 for, 3 feet of copper pipes, whatever message you wrote. So you can, and it says reply yes to fund or no to deny. So you can literally just reply YES, yes, hit send, and then Iris basically takes the money from your budget and moves it directly to that employee's card within a matter of seconds. So it's a technology that allows you to move money quicker without you having to log in and go through the whole approval process or pick up a phone, because we all know how well our cell phones work at Home Depot or Lowe's or certain places like that. But text messages seem to go through. So we've developed that technology by beta testing with our small business owners and asking them, like, what would you want? What do what would be good for you? And those are like availability, making those tools available to them it makes it easy for them, more convenient for them to run their business.
Cool. Very cool. I appreciate that. So, as we've talked about this, we started off talking about bill pay and receivables, but as our use cases were shared, we started sliding into merchant acquiring and point of sale and purchases. Any thoughts as you kind of look into the crystal ball of, you've got bill pay over here, you've got merchant services over here, you've got some fun stuff, whether it's QR codes or AI or networks. How do you see all of that kind of blending together if we were to look out 3 years from now? And if we were all to be on this stage 3 years from now talking about it, what might that look like?
If I'm a merchant, I want it changed so that my expenses of interchange are lower. And they've been pushing, and I think you well know, there's a lot of discussion about using instant payments at the POS, so that pay by bank. So you have the choice, and the merchant receives that payment immediately, and at a per item fee instead of an interchange fee. We have many discussions. Right now our rules do not support it on the network. Trying to work through fraud, trying to work through how consumer protections, because every instant payment is irrevocable. And I hate to tell you guys, but many people in the United States really like chargebacks, and they complain about their interest rates and their fees and interchange, and a lot of it's because all those unidentified charges on the credit cards, many in America just say, oh, I don't know what it is, I'm not going to pay it, just charge it back. So when you're working on if you're trying to shift, which many of the merchants are trying to do is move it away from the credit card. The trouble is, it's irrevocable. There's no consumer protections. You go and you go at that Walmart and you put in your $500, and then you're going to walk away. You have to come back in person and return, or online, and return the goods. You're not going to be able to say, oh, I didn't mean to make that payment, or my son got a hold of my phone and made the payment. It's not permitted in an instant payment world. So there's always going to be place, and that's the whole thing. 13% of payments in the United States are made by credit cards today. I think a lot of people are surprised when they see that number, because everyone just assumes everyone has credit cards and everyone's doing credit cards. The biggest payment methods are debit cards and ACH together are the two biggest ways to pay in the United States. But both of those have protections under Reg E, and the banks have to do a process. When you move into instant payments, you say it's a credit push system, you say I want to make that payment goes. And if you have buyer's remorse because that Etsy came back and it wasn't the quality that you thought the good looked like on the internet, you have to work with your merchant directly. You can't go to somebody and say, oh, reverse it because I didn't like the quality of the good. So it's going to be very different trying to find where the place is for credit cards, where the place is for instant payments, and where's the places for wires, and where the place is for ACH. Because the biggest thing is, what are the attributes of those payments covered under the legal governance framework of the United States, and what are you trying to accomplish? Lower fees or better protections?
So where I see the industry going is, so actually as this article that I read at Forbes, they reported the data. So they did a survey, and they said that they asked like small business owners if your financial institution offered accounting / financial management, expense management services, would you use them as the primary? And 30% of them said yes, definitely, and 40% of them said maybe. That's a combination of about 70%. I think Forbes reported that was about a $390 billion opportunity for FIs, for financial institutions out there. So that's where we started to say, hey, why don't we approach these FIs and then work with them to be able to roll out this technology to small businesses all over the nation much quicker. So what I see in the next, say, 3 to 5 years is these FIs working with other, say, fintech providers to be able to offer these services in-house, because when it comes to it, convenience trumps all. And if you can just go to, let's say, your bank right now, and they did everything for you, like your bookkeeping, your payments, your merchant services, your bill pay, you go to one site, and it's your bank because you already trust them. Clearly, your money's there. It'll just make it super easy for you and convenient. That's what clients want. It's just that convenience.
Yeah, I mean, I think that the innovation's on top of the rails, right? So yeah, we have some of these things that we need to figure out with instant payments, fraud, and things like that. I do believe they're going to get worked out, and there's so much opportunity for innovation on top of the rail that doesn't necessarily have to be mandated either. And that's another, example that we see going on in Brazil is this thing called PAYCLT. So a lot of banks in the US are really worried about pay by bank. Wait a minute, I make a lot of money on credit card interchange. Why would I want to enable pay by bank? Well, once you get to offering basically instant payments at point of sale, you can do things like PAYCLT, which when you think about what a bank does or what a credit card offers a consumer, it's a balance and a limit. Well, banks can actually assign that to certain consumers based on risk, and it doesn't have to come with a little credit card. It doesn't have to get processed through Visa and MasterCard. It can actually just be, hey, you know what, you have a $10,000 credit card limit, I'll just give you a $10,000 limit. You can actually pay merchants, billers instantly using these rails that we now have built that are maybe lots more banks are using. And actually, I'm just going to process them on instant payments. I'm not even going to go through Visa, MasterCard. It's an innovation we see going on in Brazil that's becoming more commonplace. And if banks participate, banks in Brazil see where it's going, and they are all getting on board with that kind of a product, because their interchange is going to go down over time as Pix gets more popular. And those kinds of innovations, I think, are going to come to the US.
Thank you. Well, listen, I thank you all for participating. I think we're coming up on time, though the clock isn't working, but just based on my watch, I think we're about where we're supposed to be. And no one asks us to stop here. We'll open it up. Are there any questions from the audience?
There we go.
One back there.
Is there an incentive for the banks? Because I know when I use online bill pay, it seems like it's getting longer, not shorter, for them to pay recipients if they're not a national biller.
There's so many different models in the back office. Some of the banks do it themselves, and they use the instant payment systems. They use this network called RPPS that happens next day. And then some are outsourcing to third parties. And unfortunately, sometimes we see when there's more partners in a process, there seems to be some time delays. And I think that's why it depends on who your bank provider is. Have they made, some of the banks have made online banking a core business for them, and they've really learned how to expedite those payments. The whole process of identifying their account numbers, what banks they are, how to make them, because they take the money out of your account as soon as you tell them. Some banks actually send checks on the outside. Right, they're going slower because in most of those cases, the banks have taken on third parties to do that for them, and they're not even understanding what they're signing up for. You can tell them, next banker. But some just don't. They think they're just lifting and shifting what they did internal, and then they realize that the fintech, the partner that they have had different merchant limits. If it's over a certain dollar amount, they're sending a check, or if they can't find them on a certain network, they're going to send them a bank check. And so that's why trying to get to requests for payments and getting it back to a bank-centric, to bring the bank customers back in a very express manner, so it's operationally efficient, and that's why the request for payment on the instant payment channels is becoming more and more appealing to the consumer banks in the United States. They want to bring you guys back, but they can't bring you back until they make the system devoid of late fees and follow-up customer service calls.
I think I'll see if there's maybe one more question, otherwise we'll wrap it up. Well, again, thank you all for joining us. Thank you all for a great panel, and I hope everybody has a wonderful rest of the conference. Take care.
Ladies and gentlemen, we will reconvene right here at 3:15 p.m. for our final session of the day. PAYCLT